One of the greatest challenges for OPEC to proceed with deeper cuts is precisely what the minister was just saying now, which is related to their market share. If they actually go for deeper cuts, that means that OPEC could actually go to its lowest market share since 2010. And this has been a key driver for OPEC policy over the past few years. Remember in 2014, when they actually let everybody produce as much as they could, trying to protect that market share, they figured out that strategy didn't work out, and then they went back to managing the market from 2016 onwards, 3 years ago. And now we see that they've got the price right where they want it. And I would expect that they wouldn't like to tighten the market a lot further, because in fact, when we look at the underlying demand for the crude, there is actually physical demand for that crude that is supporting the price. And especially in an outlook where we see the trade outlook improving, we could see demand recovering, and OPEC may get away with not having to cut any further.
So you think the best course of action is to stick with the status quo at 1.2 million?
I think OPEC stands at a very good position now, where they can allow themselves to just enforce and have the necessary compliance for that 1.2, and then over the next 3 months have an assessment of how the demand situation pans out depending on the trade situation, etc., and then decide whether further cuts are needed into the second half of next year.
What is your assessment on the demand outlook for oil? Because again, there are big question marks there, right? On if things go awry with the US-China trade deal, then that could impact global demand, that could impact oil demand. And so what kind of adjustment would you expect from OPEC if they do see the demand numbers dwindle into the first quarter of 2020?
So Argus expects demand next year will grow by 1.3 million barrels per day.
Okay. Right now it's 1.2.
That's right. So basically, out of that 1.1 million barrels per day is expected to be covered by growth in US supply. But the problem is, or the problem for OPEC is that on top of that, you have another more than 1 million barrels per day growth coming from other non-OPEC suppliers, such as Canada, Kazakhstan, Brazil, Guyana. So the addition of that is a lot more than the expected demand growth. Now, there will still be some inventory accumulation, even with the existing demand forecast of growth of 1.3. If the outlook for demand deteriorates, I think OPEC would be under a lot of pressure to have to go into those deeper cuts, because otherwise the supply accumulation will be too big for prices to hold around $60 per barrel.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.